Imagine taking out a loan so long you'd be paying it well into your retirement years. A mortgage that spans for 4 decades, the length of your entire working life. And that's the future being quietly pitched to Canadians today. A 40-year mortgage. What's their selling point? Lower monthly payments, a chance to get into the housing market, a softer path to owning a home. But behind all that marketing is a very different story, because while your payments might feel smaller, the total cost, well, that explodes. And the most brutal part, that explosion isn't just financial, it's generational. Hi there, this is Claudia Ragona, one of the Ragona Sisters, and today we're going to talk about something that affects every future homeowner in Canada, the 40-year mortgage, what it means, why it's being pushed, and whether this is actually helping or just making a much deeper problem. So let's put this into perspective. Let's rewind. Let's go back like 40 years ago, the early 1980s. The average Canadian home cost just under $80,000. Even in Toronto, one of the priciest markets, homes hovered around $110,000. And back then, the average household income was roughly around $30,000 per year. Sure, interest rates were brutal. Some mortgages had rates reaching 15 to 20%, in some cases more. That made borrowing expensive, yes, but despite that, the ratio between home price and income was still roughly 3.5 to 4 times your annual income, a ratio many economists considered historically reasonable. And because of that, buying a home wasn't some distant dream. It was a realistic milestone that people reached in their mid-20s or the latest early 30s. You graduated, got a job, saved up, put a down payment, and by middle age, many had already paid off their mortgage. That was the Canadian dream. Fast forward to today, the math has changed quite drastically. In 2025, the average home price in Canada is hovering between $680,000 to $720,000, depending on which region and what house type you have. In urban cities such as Toronto, the average detached mixed housing price pushed beyond $1 million. Meanwhile, average or median household income hasn't kept pace. That same middle income bracket that once managed a home in their 20s and 30s is often now left out entirely. Today, the first-time buyer, well, you're pretty much close to 40 years old on average in some regions. And when you put it all together, that's a full decade, sometimes more, later than the generation before. Yet the home they buy is not the same. What are they buying now? For many, it's micro condos, modular units, stacked townhomes, or prefab apartments. They're dense, they're compact, some built on leased or public land, and not private land. These structures are engineered to deliver housing units at a scale to meet demand quickly. They're not the suburban detached house with a yard where room to grow and a land to call your own. We're being told a roof is good enough. 4 walls, a hallway, maybe a balcony the size of a closet. And for many, that is marketed as affordable housing. Affordable in monthly payments, yes, but not affordable in lifetime cost and equity or living standards. But here's where things get real. Affordability isn't just shrinking in cost, it's shrinking in space, literally. Homes are getting smaller. The average square footage is shrinking. Bedrooms are minimal. Kitchens are no longer just for cooking. They're doubled as workplaces with people setting up laptops on countertops or dining room tables just to kind of make things fit and work. Living rooms are non-existent or squeezed. Storage, that's a luxury. Yards, mostly gone. Privacy, well, that's a memory. We're being conditioned to accept that 500 square feet is enough. That a balcony is a bonus. The tight stairwells and shared walls are just part of the modern living. But here's a paradox. Canada is the second largest country on earth by landmass. We have more physical space than almost any other nation. And yet we treat the land as if it's scarce. We cram people into vertical boxes and build on tiny leased plots and act as though land is a luxury and not a resource. We make 40-year debt the norm, while they turn living space into a commodity. It just doesn't add up. It's not about economics. It's ideology. A system that doesn't just limit what we can afford. It limits what we believe we deserve. It's not just the square footage that's shrinking. It's the dream itself. There was a time when owning a home meant freedom, a place to grow, build, breathe, and dream. But now, it feels like the walls are caving in, literally and financially. What was once a wide open dream is now a tight, compressed reality. The more unaffordable housing becomes, the more confined our lives start to feel. And the more we shrink our homes, the more we shrink our expectations. What was once a rite of passage has become a privilege for the few. Meanwhile, the government says it's taking action through a new agency, Build Canada Homes. Now they've pledged to deliver 500,000 new housing units per year. Sounds like a bold step forward. Maybe even the fix we've been looking for. But look at the type of housing on the blueprint. Most of it's multi-unit rentals and affordable units, modular prefab homes. They're dense. They're row houses, small multiplexes, and stacked townhomes. Much of it will be built on government or leased land and not private yards. So let's be clear, there's nothing inherently wrong with building dense housing or rentals. Canada absolutely needs more homes to match population growth. According to recent data, population increases are driven largely by immigration. They continue to grow at record rates. Yet, housing starts lag behind. Canada began approximately 245,000 new housing units in 2024, significantly below the rate needed to meet demand. To restore reasonable affordability, some experts estimate housing starts needs to nearly double, reaching closer to 500,000 units annually until at least 2035. That's a tall order and a huge structural change. But it raises a question. What kind of affordable housing are we building? Because if affordability continues to be defined by smaller spaces and short-term occupancy, stacked density, and public land leasing, then what we get isn't homeownership, it's tenure by contract. Now let's talk about the 40-year mortgage, because when you combine soaring house prices, compact housing units, and long-term debt, that's a powerful trap. Say you're trying to buy a modest house or a unit priced at $600,000 on 5% interest rate. A standard 25-year amortization would mean your payment roughly $446,000 in interest over the life of the loan. Stretch that loan over 40 years and your interest skyrockets to around $782,000. That's an extra $336,000 just to make monthly payments look manageable. That's not affordability. That's a lifetime sentence. And even that estimate assumes interest rates stay low and stable. Historically, we've seen interest rates swing wildly. If rates rise again, the real cost could far outpace those numbers. And for many buyers, that can make a modest starter unit into a financial burden that would last decades longer than they planned. But the trap isn't just personal finance, it's structural. It affects entire generations. Imagine being 40 when you buy your first home, maybe a condo. Then imagine paying that mortgage well into your 70s or maybe 80s. What equity did you really build? What legacy will you pass on? Now imagine you buy one of those prefab homes on leased land. The land underneath isn't yours. What happens there? Wouldn't ownership become uncertain? Meanwhile, the dream of a detached house with a yard, a place your kids can run and grow, have a garden, a base for generational wealth, looks like that dream fades into mythology. I don't know, guys. Looks like we're at a crossroads because the policy seems focused on volume, speed, and hitting numerical targets. But what we're losing, maybe permanently, is homeownership for the many, long-term equity, and real stability. Because a house isn't just a collection of walls, it's a foundation, a place to build memories and families and wealth. It's a stake in your community. What we're building now are boxes, units, containers, not homes. And longer mortgages don't fix that. They just stretch the debt. They basically extend the leash. So where does this leave us? What does the future look like if we stay on this path? Do we wake up 20, 30, 40 years living in high density towers, micro units, multiplexes, leased or rented, not even owned? Do you raise your children in vertical boxes, shared walls with neighbors? You trade your privacy for proximity and substitute community for convenience? Do we accept that owning your own home becomes something only for the wealthy, while the rest rent, lease, and pay for decades? This could very well be our next reality. Unless we demand different housing policies, it might become the new normal. We can build more homes in Canada. We absolutely need to for population growth, immigration, and demand. But what matters is what kind of homes we build and for whom. If we focus only on quantity, we risk sacrificing quality. And that is quality of living, quality of ownership, quality of the future. We need a housing strategy that doesn't just clock units delivered. We need a strategy that preserves home ownership and land ownership and real equity and dignity. Because a 40-year mortgage coupled with compact units and leased land and stacked density isn't just a financial device. It's a redefinition of what home means in Canada. And once we accept that redefinition, once we label 4 walls and a monthly payment as home, it becomes harder and harder to go back to what it used to be. So let me ask you guys this. Do you believe a 40-year mortgage is actually going to make housing more affordable? Or is it just a slow bleed, a long-term trap that stretches debt over a lifetime? Because after looking back 40 years, when homes were affordable, land was attainable. Because after looking back 40 years, when homes were affordable, land was attainable, and ownership was possible in your 20s, what do you guys think the next 40 years will look like? Will it still be calling debt opportunity? Will we still be living in stacked units on leased land? Or will home ownership, like real ownership, be gone completely? The question isn't just about mortgages, it's about the kind of country we want to live in. So what do you see coming? And more importantly, what are you willing to accept? Let me know in the comments. I'm so curious to see where everyone else's stance on this. So anyways, thanks for watching, guys. See you in the next one.